Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 20th, 2025, and we're diving into FedEx's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss FedEx's latest financial performance.
Let's get started with an overview of FedEx's Q3 results. What are the key highlights?
FedEx reported a revenue of $22.2 billion, a slight increase from last year. The adjusted diluted EPS came in at $4.51, which is below the analyst's forecast of $4.66. They also completed $500 million in share repurchases this quarter.
Revenue and profitability overview. Let's start with the top line. FedEx reported a net revenue of $22.2 billion for the third quarter. John, how does this compare to their previous performance?
FedEx's revenue increased slightly from $21.7 billion last year. This growth is attributed to higher base yields and increased volume at Federal Express, despite challenges like higher wage costs and the expiration of the USPS contract.
And what about profitability?
The adjusted operating income rose to $1.51 billion, with a net income of $1.09 billion. The operating margin improved to 6.8%, reflecting the benefits of their cost reduction initiatives under the DRIVE program.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 4.66 cents, but FedEx reported an adjusted EPS of 4.51 cents. What factors contributed to this miss?
The 15 cents miss can be attributed to several factors, including higher transportation rates and wage costs. However, the share repurchase program, which reduced outstanding shares, did provide some support to the EPS.
How significant was the share repurchase in this context?
FedEx repurchased $500 million worth of shares, which benefited the EPS by 0.12 cents per share. This strategic move helped mitigate the impact of the earnings miss.
Operational efficiencies and future outlook. FedEx has been focusing on operational efficiencies. Can you elaborate on the impact of their DRIVE program?
The DRIVE program aims to reduce costs by $2.2 billion, and it's showing results. FedEx is optimizing its network and improving operational performance, particularly at Federal Express.
What about their future outlook?
FedEx revised its full-year EPS outlook to $15.15 to $15.75, down from the previous forecast. They're also prioritizing capital spending on network optimization and efficiency improvements, with a budget of $4.9 billion.
Key takeaways. In summary, FedEx reported solid revenue growth and continued to focus on cost efficiencies, although they missed the EPS forecast. Their strategic initiatives, including the DRIVE program and share repurchases, are positioning them for future growth. John, any final thoughts?
FedEx is navigating a challenging environment with strategic initiatives that should pay off in the long run. Investors should keep an eye on their transformation efforts and revised outlook.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on FedEx's performance in the comments below.